If I reset your life today, zero money, no assets, no investments, could you reach $2 million in 10 years? Most people think they can. They say, I'll invest in stocks, I'll buy property, I'll figure it out. But the truth is, most people will never reach it. Not because it's impossible, but because they follow the wrong path. Wealth is not built by one big decision. It is built by thousands of small decisions, repeated over time. And if you study the greatest investors in history, you'll realize something powerful. They don't rely on luck. They don't chase hype. They don't overcomplicate things. Instead, they follow simple principles. Today, I'm going to combine the thinking of 5 legendary investors and show you a complete roadmap. Warren Buffett, Peter Lynch, Ray Dalio, Charlie Munger, Robert Kiyosaki. Each one gives you a different piece of the puzzle, and when you combine them, you get a clear path from $0 to $2 million. Let's start from the beginning. At 0, you don't have capital, you don't have leverage, you don't have investments. What you have is your ability to earn. This is where most people make their first mistake. They focus too much on investing and not enough on income, because without income, there is nothing to invest. So the first phase is simple. Increase your income. Work more. Learn skills. Take opportunities. This is not exciting, but it is necessary. Once income starts coming in, the next step begins. Saving. Most people spend first and save what's left. But wealthy people do the opposite. They invest first and spend what's left. Saving 10% keeps you stable. Saving 20% moves you forward. But saving 40% changes your future. Now comes the next step. Investing. At this stage, you don't need complexity. You don't need predictions. You don't need perfect timing. You need simplicity. Start with broad diversification, index funds or ETFs. These track entire markets. They don't try to beat the market. They become the market. This is powerful because over time, markets grow. And this is where Charlie Munger's lesson matters. Avoid stupidity. You don't need to find the best investment. You just need to avoid the worst decisions. No gambling, no chasing trends, no trying to get rich overnight. Because the first $100,000 is built by discipline, not intelligence. Now something interesting happens as you continue. You begin to notice patterns. This is where Peter Lynch's thinking comes in. Before a stock grows, the business grows. And before the business grows, people start using it more. So look around your life. What is getting more popular? What are people using every day? What is always busy? That is not random. That is growth. Most people ignore this because it feels too simple. But simple is powerful. You don't need to find hidden secrets. You need to observe what is already happening. At this stage, you build consistency. Month after month, year after year. No timing, no guessing, just steady investing. And this is where Warren Buffett's principle becomes clear. The market rewards patience, not intelligence. Now, as your capital grows, you enter the next phase. You are no longer just saving, you are building wealth. This is where Ray Dalio's thinking becomes important. Understanding the system. Interest rates go up, markets slow down. Interest rates go down, assets rise. Inflation increases, cash loses value. If you don't understand this, you react emotionally. If you do understand it, you stay calm. And staying calm is a huge advantage. Now this is also the stage where leverage appears. Leverage allows you to control larger assets with smaller capital. This can be through property or business, but leverage must be respected. It can accelerate your growth or destroy it. So at this stage, you don't rush. You move carefully. Now as you approach $500,000, then $700,000, then $1 million, everything changes. You feel successful. You feel confident. And this is where most people fail because they change their behavior. Some become greedy. They chase higher returns. They take bigger risks. Others become fearful. They stop investing. They hold cash. Both are mistakes because the strategy does not change. Only the scale changes. This is where Warren Buffett's rule becomes critical. Rule number 1. Don't lose money. Not because losses are bad, but because large losses destroy compounding. At $1 million, your money is already working for you. At 8%, that's $80,000 per year without effort. Now imagine what happens when you continue. Your investments grow, your income continues, your assets compound, and slowly, your money works harder than you. But there is one final trap. Lifestyle inflation. Bigger house, better car, higher expenses. It feels like progress. Your growth, because every dollar spent is a dollar not invested. At this stage, small decisions create massive differences. So the final phase becomes simple. Stay invested. Keep adding. Avoid mistakes. No complexity, no constant changes, just discipline. And this is how $1 million becomes $2 million. Not through one big decision, but through time. Because compounding is slow until it isn't. And when it finally shows, people call it luck, but it was never luck. It was consistency. It was patience. It was discipline. And that is the real path from $0 to $2 million.